Good afternoon, I'm Neil.
And I'm Ryan from Premium Mortgage, and today we want to talk about everybody's least favorite topic, and that is taxes. So the conversation came up today with a client, guys. They were trying to understand what they're responsible for because they're buying a house, and for the sake of this scenario, we're just going to say that it's the settlement of October 1st, okay? The taxes for the year are $6,000. Now, how do the taxes break down? Actually, daily. You're responsible on a daily basis. Let's just say conceptually they're settling on October 1st. The seller is responsible up till what date, Neil?
The 29th.
30th of September.
30th.
The last day of September.
I'm sorry, the last day of September.
30 days have September, April, May. I don't even know what it is.
They use a 30-day calendar too. So you divide the taxes into a 30-day calendar.
Right, so what happens is, let's say you're settling on October 1st. From the 29th or 30th of September, however many days there are, backwards is the seller's responsibility. As of the 1st of October, it is the buyer's responsibility. So on $6,000 for the year, which is typically paid in full, the seller's responsible for $4,500, and then the buyer is going to be responsible for $1,500. So this $1,500, if the seller's already paid those taxes, they're going to get refunded back to the seller. And then what happens in the escrows, Neil? What are they doing with the escrows for the next year?
Yeah, they're going to escrow usually 12 months. You're going to pay your taxes. And we're talking about PA now, not Jersey.
Right, could change depending on the state.
PA. Jersey's different. In PA, they're going to escrow for 12 months. Sometimes even, usually 14 months just to have a cushion.
What else do they typically escrow a year in full up front?
Homeowner's insurance.
Why?
Because they want you to pay your policy up front, because every month when you're paying your escrows, you're paying 1/12 of next year. So at the end of the year when the taxes are due or your insurance are due, they have enough money in your escrow account to pay your taxes and to pay your homeowner's insurance.
And here's another reason why, guys. Let's just conceptually say you buy this house October 1st. They want to make sure that homeowner's policy isn't paid in full, because let's just say, God forbid, right here, you have a big fire. What happens? If that homeowner's insurance isn't paid in full, you lose that house. Guess what? Now the bank's out their money. So now all that money they gave you, $300,000, $400,000, they're out that money. That's why for the next year, they want to make sure it's paid in full again.
And the reason they do that, because they don't want to have a forced policy. I've seen this so many times. People let their insurance policy lapse. Well, you know what the mortgage company does? Because they get the first notice of it. They'll do a forced policy where that policy only cost you $1,000, $1,500. You're now paying $7,000 for a crummy policy. It's not even as good. Or
way less
5,000.
coverage.
They are charging you through the nose because they don't want to insure your house. So don't ever let your policy lapse.
Exactly, guys. So again, we're talking about taxes here with escrows. We mentioned insurance. But just remember, you are responsible. If you are settling today happens to be November 1st. If you're settling today, from today on as the buyer, you're responsible. Yesterday and the past is all on the seller. If you have any questions on that, please let us know. But it is important to understand the taxes and how they may vary as far as what they make you prepay. If you have questions on that, let us know. It is something that is very important in the transaction. So give us a call. If you liked it, give it a thumbs up. If you have anything else you want us to cover, put it down below, and we'll see you in the next video.